All right, so we have a gift that we're being given today. So far as we've gone through these diaries, usually daily for the most part. If there's a day when nothing much is happening, I don't necessarily do a video that day just because I want to make it so when you see a video posted, that you know there's some really good content and there's some really good, um, I don't know, discoveries, points of view, gleanings, whatever you want to call it out of there. So we're doing a video today. Let me take off this blue blocker. There we go. Because I've noticed something that's interesting, and if you look at the this what is it the screen cap, not the screen cap, but the thumbnail for the video, it's totally true. So there's an old saying that we're seeing in the market right now: "Be fearful when people are greedy, and greedy when people are fearful," and that's a Warren Buffett phrase, which means that your signal that you want to start investing is when you start to see people irrationally scared about the market. Like there's a difference between fearful and being and seeing doom, right? So like in the Great Depression when that happened, or the Great Recession when that happened, or after 9/11, that is an event that happened, and it's not nothing to be fearful because you're going through it. But when there's uncertainty combined with pessimism or fear, then that's kind of when that's your signal that you want to jump in and start buying stuff and figure out what you want to buy. And on the other hand, when you see everybody going, "This is great, the market's roaring, it's kicking butt, we're just drilling it today," that's when you want to actually pull back what you're doing and maybe actually capitalize on some gains. So one of the things that I've noticed in the last couple days, I didn't do a video yesterday, was that we don't see any big outliers. We don't see any big gainers for individual stocks, and we definitely don't see any big gainers or losses for individual sectors. Now, that's one of the things that I typically look at. So, for example, is how are the airlines doing? How are the travel industries doing? How are hotels doing? How are casinos doing? How's oil doing? How are REITs doing? How are mortgage companies doing? And one of the things you notice as you go through here is they're all small numbers: 3%, 5%, up 5, 3%, 0, 2. This was kind of an outlier. I think it was the only double-digit one in the whole thing. But as we go down here, 5, 8, 6, 3, 2, 9.7 was probably the next highest one. And so one of the things I realized, I'm like, all right, well, I want to get a sense on what's happening. And so one of the things it's not on like front page because it's not like this big crazy ratings grab thing, is that the number of cases is going up, and they're not used to that. And they're like, why are the number of cases of coronavirus going up? Well, there's two reasons. Number one, they're testing more. I mean, duh. If you test more people, then you're going to get more positive responses. It just doesn't matter. So let's say you have two cities, they're absolutely twins of each other, and one city does very little testing, and they have 1,000 people that are listed as cases. And then let's say 100 people are listed as cases. And then the other one says, we're going to test, spare no expense, we're going to test. And they test tons of people, and it comes out that they have 400 people that test positive. And they're like, oh my gosh, this city has 4 times as much coronavirus. Well, no, they just know more about those cases. And so the other thing is I was driving today, and they were talking about that. And there was I don't know if it was a commercial or whatever, but they were just saying, hey, you can go to these places and get free coronavirus testing as long as you meet eligibility. And then I'm thinking, okay, I jumped right into my math and statistical mode. And the first thing I thought was, well, you're skewing the population, because if you have let's say there's 3 million people in San Diego County here. If you test everybody and says everybody, whoever you are, can have a test, you're going to have a certain percent. Let's just say it's 1% of the people test positive for coronavirus. I don't even know if that's the case. But if you go in and say, okay, we're going to do testing, but you can only test if you're eligible, meaning that you know somebody has coronavirus, or you're at one of those protests or something, that what you're doing is you're taking that same math equation where it's number of positive cases divided by your total population, which is a bigger population. So the number is going to go down. So it's like 1 over 100 equals 100, right? But if you say, you're not eligible for testing if you haven't put yourself in a situation that puts you at a higher risk of having it, then it's not 1 over 100, it's 1 over, let's say 20 or 15, because you're excluding 80 to 85% out of the occasion. So now you're at 6%. You're like, oh my gosh, the rate's going up. No, you just excluded the denominator. And so people are looking at, oh, the number of cases are going up, when from the very beginning, if you remember, there were three categories that people focused on early on to flatten the curve. One was hospitalizations, two was ICU beds being used, a percentage of those, and three were deaths. They didn't care about non-symptomatic or people that didn't have to go to the hospital. If you had coronavirus and you had, a cough or whatever it is, and you were at home, then that was never a concern in the process. And so you start to see people not get used to the fact that these case numbers are going up, but the governors and the governments are like, no, they're fine. We have all the ability in the world to handle it. And yet you see people start to be fearful. There's not one sector in this that is top performing or underperforming. So I'm looking at this going, wow, we get a discount because we're focusing on the one thing. We're focusing on cost basis. We know we have a good stock. We know the risk's been taken out for the most part, and we have the ability to look at what's going to make us the most money. So the first thing that we're going to do is we're going to go into here and we're going to take a look and see what the cost base is. Now, before we get there, well, I guess we'll cover what we did later on. So we plugged in the prices, which all went down for the most part. And what most people look at as a negative is these, I conditionally formatted anything under 0 is going to be in pink or in salmon or whatever you want to call it. I don't know, probably salmon's better. And I'm like, people are like, oh my gosh, we're negative. That's not good. No, first of all, I just bought this. So there's not really a whole lot of room for it to go up that fast, that soon. I just bought this, and this one I'm getting ready to sell anyway. So, and so I'm like, all right, well, we have a choice. We want to buy stuff that's under our cost basis number, right? So there's the price, 28.71. It's at 27. Puts us as a negative, right? So we have an opportunity to buy that if we want to. So it gives us a greater chance to do it, because why would I buy, even a couple weeks ago when the market was flying, I was looking at these numbers and I'm like 153, 118, 82, everything was up there. I'm like, well, I'm not buying anything where you've already got that gain. I'm not taking the cost basis and averaging it up. Like I don't want to do that. So maybe I'm just stuck. Maybe I shouldn't buy anything more, and we'll just ride it up. Okay. Which is good in one sense, but it's like, I want to feed the beast a little more. And so the market went down, and I'm actually happy about it, because I don't care what the market price is now. I care what the market price is at the end of the year, or whenever it is. But if we can get a discount now, this is great. I mean, this is literally like going to the supermarket and getting a buy one, get one free. I mean, of course you're going to do it, right? So one of the things that we looked at is basically, I made the decision probably about a week ago. I want to buy as much as I can up in the top echelon of these stocks. And again, these are sorted for upside. So it's basically this number divided by that number equals this number. So 18.26 divided by 4.49 is 4.07. So we're sorting it this way. So anything in the green we already own. And so at this point I'm looking at, we have Huff and Mifflin, which is the textbook provider company who has great financials, and MFA, which is a REIT. We used to own this a while back, and it was very slow on the uptake, so I dumped it. But we're starting to see it climb back up. And we'll walk through some of these as we're looking at. So I decided, okay, number one, I want to get XAN, which is, let me take a look here. Well, I'm not going to look on there. Let's take a look on here so you can see what I'm looking at. So XAN is, I always forget the full names of these, Exantas Capital Corporation. It sounds like the most corporate thing ever. But they basically are a real estate investment trust. They do commercial mortgage loans, commercial debt investments. Those are basically bonds and mortgages. And if we look at them for the year, we look at the trend, I mean, it was boring. And then all of a sudden it went down. So this is great. If it goes anywhere near where we want it to go, then that's awesome. We start to see it wanting to go up. It reacts up very quickly when it goes up. So with that being said, we're going to buy some of that. We'll talk about that a little, or actually we'll just do that right now. So we went in here, and no, we'll do everything later. We'll do the others. So I decided, okay, I definitely want to get some more of this. So we are going to me just make sure I have. I hate when. There we go. Much better. I hate when it like unzooms out or whatever it is. All right, 280 and 400. So I'm not going to buy the world up on it, but we're going to put a limit order at 280 and 400 shares. And the reason I did that is it's currently at, where is it at right now? Oh, we'll look at that. I guess we'll look at that later because I'll show you how I did the math on those. IVR, I was thinking of doing that as well. But we have some other ones that we kind of want to focus on. I just bought Velocity. Hufflin Mifflin we have, and they're the textbook provider. So if you have anybody in high school or grade school, and sometimes even college, those are the dominant, that's the dominant publisher. So they're not going anywhere. VVI's Viad, I just bought that. 2 is one that we looked at right here, and this is Two Harbors. We have 2231, and when we look at its upside, it's doing pretty well, but we can get it under cost. So with a 78% of analysts saying buy it, and I looked at a number of different other analyst recommendations. I put it in green here because they're all just saying buy it across the board. We thought, let's take advantage of this discount. We'll buy it under a cost basis and lower that overall cost basis. We also decided we're going to order MFA. And MFA is a real estate REIT, and we haven't really talked about them in a long time. So let's go down to MFA Financial. And let's look at them for the year. Just super boring, a little bit up, and then all the risk got taken out. And if you look at over the last 3 months, when it was relatively flat. And this is kind of when I gave up on it. But then when you started to see that there was confidence that the consumers believe that we're starting to really get out of it and end the coronavirus. See how fast it jumped up? I was like, all right, this is where we're going. And even now, it jumped up, and then as it went down, and then as things are starting to open up, but still there's this sense of confidence that we see right here. So I thought, okay, well, let's go ahead and we'll buy this one again as well. Beyond that, we have a drop off under 3. So if we have the luxury of staying above 3, we're just going to stay above 3 with everything we have. So really, 299 will count as 3. We'll round that up. So with that being said, let's go to our holdings. So over the last couple days, when the price dropped, we ended up fulfilling our price purchase for Velocity, which we had the other day. Let's see, Red Rock I had. That one only has an upside of 0.8, but it's a casino stock. So we're going to take this one out. In fact, we'll just delete the whole line. How about that? And let's see, do we have? Yes. All right, perfect. I already took care of that. All right. Red Robin Group, which is another one that I early on just has really good recommendations. So if we look at this one, Red Robin Group, we'll take a look at Red Robin up here. Why not? That's the very top one. So definitely not alphabetical on Robinhood. All right, so we look for the whole year. Relatively flat, went through a down here, but immediately went upward and then took all the risk out of it. And if we look at the last 3 months, it's going up. And whenever there's any type of reopenings or anything like that, you can see how fast these things jump. So that was one of my rationales for getting into that one as well. Two Harbors was the REIT that we just bought. So we're just going to buy it again because the upside's pretty good. It was at 3.09. But we can get it at 3.37. We'll talk about that in a second. Viad, which is a travel service. Same thing. We bought that again, and we'll take a look. Yeah, why not? We'll just take a look at that again. For those who haven't looked at Viad. Oop. And I always know these by their ticker symbols, not always by. All right, there we go. All right, so So we take a look at the year, just we include February 20th. Pretty boring for the most part, totally flat. Took all the risk out, and it just wants to get up. It's begging to get up, and whenever there's good news, it jams up. So eventually we're going to see this on a bigger climb, but we're catching this really low. So we got that as well. From there, we decided to buy more of Two Harbors. So actually we can delete these 3 out. All right, so we bought more Two Harbors. And so one of the things that I did is I wanted to basically, and we'll talk about why, the futures for the market are down for tomorrow, but we'll revisit this later to see where it's at, because those can always change, and it may affect our orders and what we decide to do. But it was down like 300 points. So I'm like, all right, well, we're going to price this down. If we get it, we want to basically get it on the bottom of the drop. So one of the things that I did, honestly, really simple, is I said, okay, if it takes a 7% hit off the price times 0.93, comes out at 468, 469. So if we buy it at 470, we're going to allow the market to take a 7% hit and then buy it low. If it goes lower than that, fine. If it goes down 10, 11%, fine. We'll eat 3 to 4% of the loss, but we're not going to take 11. I'm not doing it as a market order, that's for sure. So we did the same thing for XAN. This is the commercial real estate REIT. So we did 0.93 times the current price, 2.98. And that takes us to 2.77. So we'll buy it at 280 just to keep a nice round number. Again, we have an upside of 4.5, so I'm not too worried about trying to be too exact on this one. And then MFA was the same thing. So 2.57, we'll take the 7% price hit at 239, so we're buying it at 240. And again, these 3 that we're doing all have really good upsides, as well as the Hufflin Mifflin. So we're looking really good on this one. So with that being said, boom, 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 let's make sure that we have this correct. And they don't have this number on the desktop version, so I always have to use the app on here. Okay, 983834, 9838.34. All right. All right. So with that being said, overall, we're doing really well. Our top performer is still, let's take a look here. Nope, PVAC was number 1 before, but now it's Crestwood Equity and is number 1. PVAC is number 2. And we don't have anything over 200 for now, which is fine. But we're still up 25,000. The current one that we have is gained 50% of what we currently own. Everything that we've redeemed as well and traded back in, we're up at about 87%. And based on what we've deposited so far, including taken off the margin, is 88%. So with that being said, we are projecting, we'll add, we're going to take Red Rock out because we don't have that anymore. So we're pacing with what we own at about 283. I have another 21,000 in limit orders. That puts us over 300,000. All right. So that being said, let's take a look. We had talked about the market for tomorrow. So look at the indices. This was at 330 before. Now it's at 220. And that self-refreshes. This one, CNN, is at 261. So it's dropping. So I might change these out a little bit. I may even drop an order or change the buy price on it. But we're going to take a look at this later tonight and see what we are looking for. Some things to consider. So one thing I've been thinking about the last couple days is when we're buying prices, we always talk about our February 20th price, which is when the market went down pretty much across the board. So we're looking at, okay, what does it do to get back to where it was before? But one of the things that you'll notice is that they basically injected like $6 to $7 trillion into the economy. So there's more capital out there that's been put in the stock market. So you take in that and a pent-up demand where people are just itching to get out and spend money and going on trips and going to football games and concerts and any number of things. And you're going to see, I think we're going to exceed the stock price that we see on here. And I think the upside's actually going to be a little bit higher. But for right now, we're not focusing on, I know the glamour part of this is focusing on our gain and how much money we've made so far, right? And maybe how much our, property or how much it's worth and technically, if we're looking at this right, that's actually the amount of gain that we have there, 86% off of what we did. But what we're really looking for is our cost basis. We want to lower this as much as possible, load the slingshot, and then when the market comes up, we want to have as much in that slingshot as possible so that we can ride that home. So let's see. So with that being said, yeah, we'll take a look at this. I recommend a couple things. If you go to investing.com, they have real-time stock indices. And I never understood why indices is spelled with another I, since it's index. You'd think it would be indices, but it's not. But you can see how this is looking. I also do CNN. It doesn't real time it, but they do talk about stocks that are most affected by Corona. We're never in this, believe it or not. But it gives you usually a summary on kind of what's going on. So, but that being said, read a lot of news, read mainstream news for sure, but also do not read mainstream news only, because they're pushing a narrative. You also want to look at contrary sites. You can pick your own, but pick ones that are completely unaffiliated. Sometimes that don't even like each other, and it's like being in a courtroom and a jury. You're going to hear both sides of the argument. You get to make up your mind for yourself. But with that being said, we will see you tomorrow. To get more information on the sales cheat code, go ahead and click on the subscribe button below. Also, down below in the video description, down there, there's a link that takes you to our website that gives you additional content, some additional freebies that we have, and gives you information on some programs that we have that have been proven to help people to make sales easy so that you can make the kind of money you want, live the lifestyle that you've always wanted, and not have to struggle in the process. And what might be the coolest thing of all is you don't have to put much effort into it. It truly is a cheat code that most people don't know about. And it's a cheat code that can change your life today. So click on the link below and let me help you start to experience these results starting right now.